Tim, if you're good to go, give me the thumbs up. And all right, these guys says he's good to go.
So
okay, we're getting market structure, and he's coming from one of his balconies of his 37th house.
Yeah, I'm sorry you can't see the ocean behind me. You barely you see it back
oceanfront property.
Yeah. So, well, this is actually the next.
We can kind of see it.
There, you can. Yeah, I was out there on the balcony, and technology conspired against me. So I look a little dark. I'm doing my Spencer Israel imitation with the facial hair. So I heard that. So you were talking about Ford.
Yep.
Is that right?
Yeah. We want market.
So what did you conclude?
I like to play the run-ups into the events. So we have big F-150 electric unveiling, apparently now at 9:30 at night on Wednesday. I'm going to have to verify that time. But usually I like to be long ahead of those events. But I was like, now I have to just get the market structure sentiment on Ford to see if the ducks are all in a row and if I can put on this trade or not. So
can I guess? Can I guess where it's at?
Yeah, please. And maybe we should make it interesting.
I think
we'll put money on where is the market structure at?
How much are you willing to wager, Joel?
Joel will bet on everything, Tim. He will go there. We go to a baseball game and he bets, at the beginning of the season, how much is the average going to move when he gets a hit? Okay, how much is it moving? It's going up 3 points. I think it's going up 3 points. I'm putting the over-under at 4.
Will you give me 2 either way?
Joel's taking the bet for sure.
Okay. I'll give you 2 either way. So what's your
Lunch. I say it's at 4.
You say it's at 4. Okay, so let's go have a look here.
Because there's 10 possible.
Yeah.
Yeah, sorry.
It got hit. It's coming back up, but it's not enough to, it's not like a 5 yet.
Well, let's have a look. I'm going to pull up the Benzinga portfolio for today. By the way, if you're listening to this and you're new to these Market Structure Monday sessions, apologies for the instability here, but that's what you get on the beach, and I hope that you can see that.
What beach, dream, man?
Yeah, so what you can go to marketstructureedge.com, and the amount of time it takes you to put your name and email in, you can follow along. So let's have a look at this, and we'll add Ford to. It's harder to type this way. Okay, so I'm going to add Ford to this. You can tell by the paucity of items on my screen here the state of the market, right? If I've got 10 or 15 things in the Benzinga Market Structure Monday portfolio, it's clearly good, right? Right. So let's add Ford, and we'll see how close Joel came to the correct with the over/under. Assessment of where we are.
Gave me 2 each way. This is a lot.
He was so close. It looks like it's 5.
That's actually really good. So you're learning this, Joel. You're able to make these. Pretty soon you won't need me. You'll be able to make these calls.
I'm sorry, Tim. I'm sorry. You owe me lunch.
Head has become your algorithm.
Well, and let's explain this for folks. So again, this is not fundamental analysis. We're not looking at Ford production numbers or income or revenue and how those compare to expectations from the sell side. All we're looking at is supply and demand. And does the supply-demand equation justify riding a wave? And stocks tend to do better when they're above 5.0. Very simple stuff. That's the beautiful thing about market structure. It's very simple to understand. And you want short volume at or below trend. So let's look at these 2 charts. So sentiment is the smooth line. Price is volatile. Price is very challenging to trade. So sentiment here is rising and it has returned to 5. Short volume is right at trend. Joel, I would say you are absolutely correct. This is likely a very good opportunity in Ford. And you want to buy rising sentiment and sell falling sentiment. And you can back test this too, folks. If you want to go back and say historically, what has happened if you go buy Ford at 5? We can go test that very easily and see what the history tells us. And that's all we can go on, right? We're trying to predict the future using history, and that's what everybody does. The difference here is that we're using supply and demand to help us understand what's occurring. And that it's the fundamental economic principle is supply and demand. When there's more supply than demand, prices go down and vice versa. So if you just bought 5 and 5, you could make 20% in 90 trading days here. Versus holding it and returning 34%. But we only needed to hold it for 59 days. Notice how much time Ford has spent above 5. 52 versus 31 below. It's rarely at 1. Might tell us that when it's a 1, we should buy it. When it gets to 10, it only has spent 14 days there. That's probably a good time to leave.
It doesn't like 10.
Doesn't like 10s. No, exactly right. Tech tends to like 10s, or used to. But that's how you know. You could look at this and say, well, I will have roughly 12 days in the trading period. I rarely stay that long, but we know we've got a pretty good shot at a return here. Could be 3, 4, 5% in 3, 4 days, and that's pretty good. That's how you want to think about this.
Tim, you talked me into the Ford trade. I think I'm long it already, but I might buy more ahead of this event. So Tim's getting me bullish.
Well, the contrast to that, and there are a great many Tesla faithful out there, and of course we've spent a lot of time talking about Tesla, and
we better talk about it again.
Well, I think it's worthwhile. Clearly, it has discouraged the masses. It's the equivalent of waiting for the savior. When will he return? It's because it's been dismal in Tesla for some period of time.
1 or 2?
Exactly right. It's a 1 and bottomed, and it's only 40% short. So you would look at that and say, well, that's pretty good data from a supply-demand standpoint, in the sense that all of the demand has come out, and there's excess supply telling us that there is an increasing probability of demand returning. The trouble, again, if you went back and back-tested Tesla, is that at 1, it doesn't do well. You don't want to buy Tesla at 1. You want to buy rising sentiment in Tesla. And the history really shows us that that's the way to go. If you buy when sentiment rises off of 1, most of the time that has produced returns. But you look at the data, short volume is below trend over there on the far right in the middle, right over here. See, short volume is below trend, and sentiment is right. It's been sitting at 1 for the longest time since February. And at that point, we got a very nice return in Tesla. So traders, that's how you have to think about it. You don't want, this is the difference. How would you know otherwise when you should buy or sell something? And you all, the 3 of you, can talk to technicals and what technicals look like here. But certainly from a market structure sentiment standpoint, you're watching this now. But we're not quite there.
There's no signal to buy this, even though it's a 1 and it's extremely probably oversold. Maybe from this, it's still there's no sign of ticking up here, at least in the market structure.
We're getting this down, Triple D. We are getting this stuff down, Pat.
You are.
We're learning. Takes us a little while. Me and Joel learn things about half speed of other people because we're starting to get older now. But brain cells don't.
It only took us like 2 months, but we got it.
Listen, if anyone knows about deteriorating mental faculties, you're looking sort of vaguely at him here.
What ocean is that, Tim? What ocean?
So this is, let me see if I can give you a better view. The connection really...
yeah, we don't want to...
There we go. Holy cow.
So, I am right on top of the ocean here. And this is the South Carolina coast. So this is
I love South Carolina.
It's really spectacular. And obviously, it's not the ocean that you get near Destin in Florida, but it is a spectacular beach, a very wide beach. And this is about 30 miles south of Myrtle Beach, a place called Pawleys Beach. And
my second favorite state, South Carolina. It goes Michigan, South Carolina, Oregon.
Is that
Oregon.
right?
He always goes out the board somewhere.
Joel has him ranked 1 through 50. Don't worry.
Well, it was
Ohio's
we had
last.
not.
Is that a state?
It's working on it.
Sorry, Tim. Go ahead.
No, that's okay. You should have told me, Joel. I had no idea. We had not been to Savannah and Charleston, so we couldn't go to Italy. So instead, we went to Savannah and Charleston, and then came up here to the beach before returning to Denver.
So Tim, let's talk overall market for a second here.
Yeah.
Because for the first half of last week, it was like, oh no, there's inflation. This is not good. And then for the second half of the week, it was like, is there really a problem though? I don't know. So maybe you can tell us what transpired from a market structure point of view last week.
Right. And thank you. There are two things that I would say, and the inflation fear trade lasted exactly one day. Right. The whole of punditry trumpeted this sudden fear of inflation, and then the next 2 days we soared, and there was deafening silence from punditry. No one seemed to have an answer. And before we get to market structure, inflation does not cause equities to decline. Inflation causes equities to rise. Higher interest rates can cause equities to decline because you change your allocation to fixed income instruments. But higher interest rates are a response to inflation. They are not a consequence of inflation. Inflation is always and everywhere a monetary phenomenon, and no one has challenged that Milton Friedman proverb, and it remains true. Low interest rates are the cause of inflation. So have we had inflation? We have had inflation for a decade because we've had artificially low interest rates. So we know inflation exists. So what does inflation cause? It causes money to rush into risk assets until it's fully absorbed. And then it will cause deflation, the exact opposite effect. So that will come at some point. Now, to answer your question about what market structure tells us about this, easy step number 5 of using market structure edge is managing overall risk. It's a very important principle. I've used this, I borrowed it, I stole this from somebody else, but if I describe to you an awesome stock, but it's describing the best chair on the deck of the Titanic, what good have I done you? And the broad market has overarching authority over everything. And so we use what we call broad sentiment for risk management, which hopefully you can see on my screen. I like to back up 3 months and look at it. So when sentiment is, and I'm doing 30 days here because I want to make a point. This is SPY. This thing moving all over the place, that is SPY. What is sentiment doing? Not moving at all. All right, that tells us the market has no capacity to rise. We are seeing rotation from this thing to that thing. That's what sentiment will tell us. The market has done precisely as sentiment told us it would do. If we step back a little bit, you can see where this condition began. 3 months back, here is the peak. And the market is no higher now than it was then. So when the market peaks, reduce your exposure. You have to be very picky about the things that you trade when this condition exists, because this is how you lose a bunch of money. When broad market sentiment is not giving you any direction, be wary. When sentiment is rising in the broad market, there's your opportunity. When it peaks and falls, reduce your exposure, or it will cost you money. And so where are we? Well, we're right where we were. This isn't over yet. I do believe that into options expirations Wednesday, Thursday, Friday this week, we're going to see some returns simply because options are devalued. And high-speed traders are going to scoop up baskets of those and try to run the price up. Even if today is not a great day, I bet it will be into expirations. But unless and until this trend line of flat sentiment improves, the market is going to struggle to rise.
All right. That makes me feel, that makes sense, and that makes me feel a little better. The constant is what I'm all about. We
got to see one more. We got to see Disney because me and Spencer are talking about buying Disney today. Is it safe to come in the house and mouse, or are we trying to call a bottom here that maybe we shouldn't be calling?
This is probably like in the 1 to 2 region again.
I think it's low. I think we might be early. We're kind of getting gutsy here with the Disney. 4.2, 4.2.
Oh, higher.
But
nice.
It's falling. But look at the trend. Look at the trend line. 4.2 and down. Don't buy traders. Don't buy falling sentiment. Buy rising sentiment. So
we're too early.
Why are you doing this to me? Come on.
Now he's talking us out of it. We're too early.
I can see Dennis now.
Now we're not.
So, this is gonna be Dennis like on the open today. This is gonna be like frozen. He's not gonna be able to.
I don't know what to do. I'm like, my instincts tell me to buy Disney, but the market structure says I'm too early.
The exact wrong conditions exist here.
Oh my goodness, exact wrong. Exactly backwards.
Like, let's short Disney.
Right? Short volume.
I turned around and I just short Disney.
I'm buying.
Right? It almost always is true. So the last time, here it was a 5, but once short volume rose well over trend, price declined. It's not immediate. There's cause and effect. And it tends to be, it gives you 3, 4, 5 days. That's what you know. So 3, 4, 5 days from now, revisit it. And maybe sentiment will have reversed. But right now, this would not be a good time for a house of mouse.
Too
All right.
early.
Fine, but let it be known. It's done.
He's already made his decision. You're not going to sway him. He kind of swayed me, though. I'm like, I might just let Spencer. I might just watch Spencer.
No, I said I'm buying puts. I was joking.
Let's see if we can find something at a 10.
A 10. Oh, sure.
Nucor. Nucor.
9.
I saw it at the bottom. I cheated.
8.5.
No, Nucor is 10. I can see it already.
Oh, really?
Okay. And Nucor remains an excellent stock to hold. Look at where we are. And we said this last week. We talked about this. Right? So as long as it's at 10, you sell falling sentiment. And it's at 10. And look what short volume did last week. So for 3 days, it dropped. So we were a little above trend, but not bad. It returned to trend. I'd look at this and say, you can stay in that until sentiment changes or short volume moves meaningfully above trend. And so right now, it's a very good place to be in a rocky market.
All right. Tim Quast is the founder and CEO of Market Structure Edge. Joins us every Monday for Market Structure Mondays. The link is up on the screen right there. Tim, always a pleasure. Thank you very much. We'll talk to you next week from a different state.
Sounds good.
All right.